everybody likes to text, everybody likes to email, and a mortgage is the largest financial decision that 99% of America makes. So you need to be able to pick up a phone. If somebody's older, it's kind of an unwritten thing, but with somebody who's younger, you're doing yourself a disservice by texting and just emailing.
Welcome to the Full Disclosure, the mortgage podcast where we talk about what's really going on behind the scenes. I'm your host, Nora, co-founder of Morty, the all-in-one platform for mortgage. Okay, special welcome to the G&G team. So Joey Gutter and Lee Grossman calling in from Central and Northeast Ohio. Hey guys, it's great to see you. A little bit about Joey and Lee. So Joey has been working in the mortgage industry for over 15 years, working with home buyers across the country. And Lee worked in corporate finance before making the move over to mortgage about 4 years ago when he joined forces with Joey to establish the G&G team. The idea to form the business came together over Thanksgiving dinner, as Joey and Lee are cousins. Joey concentrates on the client consulting part of things, including the initial application, while Lee manages the pipeline and all of the operations. The division of labor allows for better support and enhanced client experience while allowing each of them to excel at what they do best. For Lee, that's attention to detail, and for Joey, that's relationship management. Welcome both to Full Disclosures.
Thanks for having us, Nora.
Awesome. Thanks for having us.
So to kick things off, we like to do a rapid fire segment where we ask a couple of questions and you guys can give your quick one answer. So you guys can both shout them out or whoever gets there first. We'll see how it goes. Sounds good?
Sounds good.
Okay. What industry would you be in if you weren't in real estate?
I have a degree in pharmaceutical business, so probably something with medicine.
What's the hardest state to do a mortgage in?
Texas. Texas has a bunch of extra laws that, they come up every now and then, but if you help people, they get through it. Ultimately, it's just a part of the game in Texas.
I would say Florida. We had a couple loans with HOAs that were pretty complicated down there. So,
what's the fastest loan you ever closed?
We closed a VA loan in 12 days once.
12 days. What's the most underrated neighborhood in Cleveland?
I'm biased. I'm in Highland Heights, so the Highland Heights area.
I'd say south of Vermilion, that part of the real estate under Lake Erie isn't as developed.
And Browns win a Super Bowl in your lifetime, yes or no?
0 chance.
100% moving on from the Browns, I think, after this year.
Okay, thanks guys. That's the rapid fire part. So Joey, what's the G&G's team disclosure?
There are a lot of unique loans, especially in this market. You have a lot of situations where, if it's a normal market, you might get, some normal scenarios, but, with the market the way it is, you have a lot of non-QM loans, which is basically, a loan that, maybe Fannie and Freddie, the, house that you look outside your window that most have Fannie or Freddie loans. But if it resolves a problem, self-employed, bank statement loans. So, if you write everything off for those deductions, we can still get you a mortgage.
And tell me why you feel like it's harder to get a conventional 30-year fixed mortgage today than it was maybe 4 years ago.
I think it's just a different consumer. The market is in a different place. When, rates were, very low, you had, your traditional cookie cutter files in the market, where this market isn't, a bad market. There's advantages and negatives to every market. But, with where we're at, you just have to, be prepared for a unique situation. There's a lot of rules in mortgages, and the more you know, the more you can help people.
When did you do that loan in 12 days?
We did that, uh, I would say maybe a year ago.
Oh, got it. So even in market, right, there's still opportunity to, I would say, like, over deliver on some of the harder parts of mortgage, right? Like, you can't always control timelines. To do a loan in 12 days, you need to have a lot of things go your way. So I was just curious if one of those things had to be like low interest rate environment, or if it was really just the dynamics of the loan and the loan officer.
I would say it's the team aspect of it. If you're good at finance and economics and helping clients, um, that's important. But then with how the mortgage industry is structured, you have to have a good support staff. So even though I do a lot, Lee knows how to move the pipeline. He's been doing it for quite some time. We work together. So um, obviously, I'd like a 30-day contract. But if it's, hey, Joe, I have to close this in 2 weeks, or we're not going to get the deal, we're going to do everything for you. And that doesn't matter if it's $100,000 file or a $700,000 file.
That's why you're client focused, right? Because it's not about the loan, it's about the person.
Correct. Yeah. I'm very old fashioned. I work with, friends and family, and, you want to get them the best deal with, the current environment. By working at a brokerage, you're already getting them a better deal with how the market is. When you work at a lender and you apply directly to a lender, the margin on that file is going to be higher naturally. Whereas if you work with a broker and they have 20 different banks, those banks know that I can send the loan to 20 different banks. So they give you a better deal, which is a very good feeling at closing when you look at the numbers and you approve the final documents and you see how good of a loan it is for the consumer. It's a very good feeling.
I'm curious, like, if a brokerage or brokering a deal is better for both the customer, the person getting the loan, and the loan officer, why do you think more than 50% of deals are still happening through lenders today?
I think it's a big change industry wise. If you would have told me 10 years ago that the broker model was, going to grow in the way that it is, I wouldn't have believed it. But it makes a lot of sense. Interest rates are higher. So you want to get the consumer the best deal. You want to get the consumer the best deal if you work at a lender as well, but you only control so much. There's a lot of people involved in the process. So, if you work with a broker, you're naturally going to get the client a better deal. So, we made this shift to that, and I do business all over the country, but a lot of it's in Ohio, and you really just want to get the consumer the best deal.
Lee, I'm curious, going back to this 12-day VA loan or any loan that has a tight requirement, what do you think is the most important thing to happen to deliver on a promise like that to a customer?
I think there's two things. One is probably tackling as many of those conditions as you can right away. If you can jump on those, and then you have a pretty responsive client that gets you the right things, you can get something turned around in the same day, if you really focus just on that loan. So that particular loan, I think we had me and somebody else processing it at the same time, so there wasn't any gaps really missed. And we also had that client was super responsive. So and the bank was great at tackling the approval quickly. So we got a mid-level review, and then it was quick. So I would say those two things.
What's the biggest thing in a loan file that's not in your control?
Um, Probably the appraisal.
The
That's
amount or the timeline? I mean, both, I guess.
the timeline is can be tricky, and then it depends, I guess. Both depends on the file.
what do you think when you hit something that has like a really long timeline or some kind of bump in the road that you didn't necessarily anticipate up front? Do you have any strategies that you can share with the rest of us around how to navigate that with the consumer?
Joe, I feel like it's tough to you have to kind of digest it. I think when it's going to be somewhat bad news, but I think Joey does a really good job of kind of managing expectations and focusing the client on the end goal, which is really to improve their financial outlook. And sometimes maybe something's going to take a little longer than you might expect, but there's at the end of the day, we're really striving to improve their lives.
Yeah, I feel like staying focused on the objective is a really important strategy, as well as just like honest communication.
Right.
Don't be sketchy, right?
Yeah. It's
I,
a balance. Yeah.
I like to call it's crisis management. So ultimately, mortgages are very, very difficult in 2025. So we may make it look easy, but it isn't.
Well, I was also going to interject and just say, Joey being in the industry for so long, there's kind of not a loan he hasn't seen. So he can always kind of pull from his memory bank of, okay, well, this didn't work for us. Maybe we can try this route. So, and I mean, over time, I've kind of picked up on a few things that I can, okay, well, we can use, if we can't do A, let's just do B. But Joey's got like the whole alphabet. So I feel like
I feel like that's a T-shirt. Just saying.
Would be a good one.
What kind of advice would you give like a new loan officer who doesn't have Joey's level of experience for how to deal with crisis management?
It's really the way that you express things to the client. So, when there's an issue, especially if it's a purchase loan, there's emotion involved in a purchase loan when it's, a primary residence. So, that emotion, you have to, show them that you're on their side. My mom's kind of hard to handle, so I say clients are a walk in the park, but it's really, they have to adamantly be able to feel that you're on their side and you're doing everything for them. And then you'd be amazed that if you have a problem, they just trust that you're going to solve it somehow.
Yeah, trust is a huge part of this. I feel like, just speaking about Morty, part of the challenge when we initially started, so Morty's 7 years old, and when we were exclusively doing direct to consumer mortgages, was that we hadn't been operating for long enough to have developed that trust in the broader industry. And so we felt we were a little bit of an unknown. We had great rates, we had a great experience, all of these things. But at the end of the day, there's this real personal connection. And that's part of why, I'm excited anyway to be working with so many local loan officers, because it's both about creating that trust and like knowing your client on a very personal level. I know you operate nationally, Joey, but you said earlier that a majority of your business is in Cleveland or in Ohio. How did you like create that network?
So when people ask me that, it's it's adamantly who you choose to spend time with. So if you're a good friend and you're communicating with your friends, I'm starting a referral group, which is going to be fun. But really, if you're a good friend, then somebody is going to say, hey Joe, can you take a look at this? Or I have somebody that I need you to call. And then you go from there. I started in a consumer direct world. So I started, working with people all over the country, and I still have those clients. But as I get older, I'm in Cleveland. So as I get older, it's more Cleveland, people naturally. And, we have a lot of people in, I grew up in Cleveland. Lee grew up in Cleveland. So, most of the people we know Florida is an important state because Florida, if you're from Ohio, you're eventually going to move to Florida. So it's important. It's important to have the Florida license as well for the snowbirds.
I feel like that's true of all cold states. Like, I'm from New Jersey. I live in New York, but like half the parents that I know have either moved or spend, 51% of their time in Florida.
Yeah. And then being a millennial, your friends, I don't like to say that, by the way, but I am technically a millennial, kind of on the cusp of whatever's before that. But basically, your friends move everywhere. My friends are from Ohio. I've lived in Cleveland. I lived in Columbus. I've traveled a lot, but most of the people I know are from Ohio. And if you're in your 30s, you could buy a house in Texas, you could buy a house in Arizona, but you still want to have those licenses so that you can, help as many of your friends as possible.
That makes total sense. Lee, I'm curious, you moved from a career in corporate finance into mortgage to work with Joey. What skill sets or attitude did you pull from corporate finance to help you in your role at G&G Team?
A few different things. I think in the finance world, corporate finance world, you can't really make a mistake, and it's kind of the same thing in mortgages. You have to be extremely detail oriented, so that helps naturally. But I did some budgeting, P&L management, and the latest job I did before moving over to this world that was franchise consulting. So I kind of worked out in the field. I had my own. I worked from home. I had one-on-one sessions with business owners. So that really translated well to this. But I feel like mortgages in general have been a lot more rewarding because you're ultimately you're helping change their lives, as opposed to maybe somebody's small business is nice to help them, but this is a lot more rewarding.
Yeah, I mean, it's more emotional, right, when you're doing the residential. But I was going to actually ask if you guys had ever considered doing like small, any commercial deals, given the fact that you have such a strong network in Cleveland. I'm sure people come to you wanting to do something for their small business.
Yeah, I mean, again, it's a unique market, so you're going to get some weird scenarios. And, we've closed a dog kennel a few years ago in a commercial space where.
Wait, I'm sorry, you closed a what?
A dog kennel. Somebody had a dog kennel.
Okay.
So, yeah. And then we got another one we're trying to make work potentially. But, it's, business owners. Cleveland, the commercial space is actually intriguing because Cleveland has a disproportionate amount of self-employed. There's a lot of self-employed individuals in Cleveland compared to other cities. Columbus has, every company's headquarters in America, whereas Cleveland, everybody's kind of, doing the small business thing. There's larger businesses in Cleveland, but it's just geographically you have more self-employed. So with the self-employed, they might own a warehouse, they might own a restaurant, they might own a bar, and then you just try to help that consumer.
Yeah, it also just like helps to be that holistic financial advisor, right? Like we've had a lot of people who are just financial planners or CPAs want to add on mortgage for exactly that same reason, so that you can be holistically advising and supporting your clients in all of their financial decisions. So that makes total sense to me.
Yeah. You want to be a one-stop shop. You don't want to be the guy that's just known for doing the easy files. You want to do the hard loans, and, then realtors see that, and, then unfortunately, then you're the guy they call with a problem, but it does give you an opportunity.
You get the call that's like, this other person messed up this file. I need your help to close this in 15 days. Can you do it for me?
Sounds
right?
about right.
Yeah. And then it's go time. Cool.
But you asked that question about how can you improve your network, in terms of client base. My perspective is a little different than Joe's because he's been around for so long. Sorry, Joe, but I do think building a relationship with the realtors is a great start. That's something he said. I know it's more common now, but back when I started, he's like, you have to call the realtors on every deal, and build a relationship with them, and it'll help solidify the deal at the end of the day. So that's a great way to naturally build your network.
Right, because with the realtors, it's also about trust, just like with the consumer, because this is their deal, their business, and their income. And so they need to know that they can trust the person on the other side of the table to get this across the finish line.
Yeah, they're naturally, when you approve a friend or a family member and they're working with a realtor you never worked with, they're naturally off the bat not going to want to work with you because they don't know you. The main thing, because I've initially that bugged me. And then I asked a realtor I worked with for a long time and she said, Joe, it's not personal. They just don't know you. So, they're realtors, every deal really matters to their income. So, what we do that's very important, and we educate every client on it, is especially in Cleveland, because Cleveland still listings don't stay on the market very long. So you have to call the seller's agent. You have to explain that you have the file in a good place, that you're ready to go. And you would think every banker would make that call. They don't. So if you take the time to make that call, and if somebody has 10 offers, you're the hero because you picked up the phone. You don't talk about, price or negotiate. You just make the agent feel comfortable with the fact that the loan's going to close. Whereas it's, not at a, bank where it's in process for 30 days and then you find out, you can't do it.
So you make that call when the offer goes out. You're not even talking
Absolutely.
about when the offer has been approved. You're saying to help your client get their offer accepted.
Every
Call the
time.
seller.
Every time. Now, sometimes you have to remind people to do that. Like, hey, I've put in 2 or 3 offers and I haven't gotten it. It's like, you haven't texted me the address. So when they do, then, you can make that call, and it really does go a long way.
Yeah. I mean, the doing something like that, it's not just that like you're an accessible person so the realtor can connect with you. It's also like you're on top of your stuff, right? And so there's, even if they don't know you, that you're starting off on the right foot.
After that phone call, yeah, exactly. But if you don't pick up the phone, then, I don't know how it's not done by everyone, but it's time consuming is why, I guess. But, again, we're an old fashioned group. So, I'll roll up my sleeves whenever I have to.
Me too. That's just sort of how it goes. If you care, you roll up your sleeves and you get it done. What does it mean to be old fashioned?
That's a really good question. It's a kind of a pet peeve in today's world. Everybody likes to text, everybody likes to email, and a mortgage is the largest financial decision that 99% of America makes. So you need to be able to pick up a phone. If somebody's older, it's kind of an unwritten thing, but with somebody who's younger, um, you're doing yourself a disservice by texting and just emailing. But it is a part of the time. I would say 10 years ago, texting wasn't a part of my day. Now it's half my day. So, it's important, but I like to talk on the phone. I like to get to know people. I just go about things like it's the 80s.
the key to running the key to running a successful mortgage business, pretend it's the 80s.
I was gonna say Joey embodies a 40 or 50 something just in his daily life. He's watching sitcoms from the 90s and
which ones?
Which ones, Joe?
Recently we have Seinfeld on every now and then, Married with Children. I like that one. That's a good one. Not politically correct, which is kind of entertaining because that's not a thing today. So yeah, like it's
Seinfeld has had more staying power though than I think any other 90s sitcom. I mean, there's like
a classic.
So are there any other like questions or areas that we have a couple minutes, but are there any other questions or areas that you guys would like me to dig into or for us to talk about?
I think something really important, I know that we just made a bunch of jokes how I'm old fashioned, but you have Morty's platform is it's internet based and it's very user friendly. So going to the conversation of, having to call the seller's agents, a lot of those phone calls are on Saturday or Sunday because they just saw a house and they haven't called you to do anything. So they're calling you right before they're seeing the house. Well, Morty's system lets you print off a pre-approval letter, by yourself. So, the whole thing's automated. You can get an idea of the interest rate. So if you're tech savvy, if you're younger, you like texts, you like emails, you like all that stuff, it's perfect for you.
Yeah, I think the marriage that you've been talking about around this like old school relationship building combined with technology to allow customers to self-transact and understand exactly what's going on with their loan, and also, have real-time information to make realtors and home buyers more comfortable is core to our vision. I mean, I think like the human part of mortgage is not going away, and it shouldn't. It's such a big transaction. It's so scary. And so that's really very core to how we think about it. And I think you guys hit it out of the park with that.
Thank you. The other thing I would note is the team is great. And something that's very noticeable is a company will preach that if you bring something up, they're going to look into it and change it, or, make a change that's going to help everyone. Morty does that on a daily basis. So if you have an idea or something that you think is going to benefit everyone, it doesn't fall on deaf ears. They do what they have to do to implement it. Thanks,
Joey. That means a lot. Do you guys want to do like a little plug?
Yeah. So it's ggteam.morty.com. Say that one more time. ggteam.morty.com. And then when you get there, fill out an application for, purchasing a home or refinancing a home. Make sure to put, our name at the bottom so it's assigned to us. Yeah. Thank you.
Awesome. Well, Lee and Joey, this was so much fun. I really appreciate you guys taking the time to do it. And I enjoyed learning about both how you guys work together and how you guys work with clients. And I hope to talk to you guys soon.
Thanks, Nora. It's been great.
Thanks for having us.
Really appreciate it.
That's a wrap for today. Thanks for joining us. And remember to like, share, and subscribe so you never miss another episode. And remember, you can't close if you don't disclose.